Hello, this is Erin Swenlin with DecisionPoint.com, and I am bringing you my favorite indicator, which is the Silver Cross Index. This is an exclusive indicator that we came up with at DecisionPoint.com, and we have all the charts for them that include the sectors, the major indexes, and a select few industry groups where we have the Silver Cross Index. Silver Cross Index is a bias indicator, is what we call it. But before I get into the analysis of the Silver Cross Index, let me explain to you a little bit more about it. So we do have also, besides a Silver Cross Index, we have the Golden Cross Index. Most people are familiar with what a Golden Cross is. That is when the 50-day EMA or moving average, whichever you use, crosses above the 200-day moving average. We happen to use EMAs. A silver cross, we wanted to get an intermediate term picture, not just the long term as far as having a 50 and 200-day crossover. So what we did is we came up with a silver cross, and a silver cross is when the 20-day moving average moves above the 50-day moving average. And really, the golden and silver cross indexes are very easy. We basically take the percent of stocks that are on a golden cross or that have a 50 above their 200, and that gives us the golden cross index. And then we take the percent of stocks that are on silver crosses or have a 20-day EMA above the 50-day EMA. So it gives us a much better internal look at what's going on with participation. So that's where market bias comes in. We consider a price above the 20, 50, and 200-day EMAs. That's part of the equation, if you will. So we want to know what that is. What are the percentage of stocks above their 20, 50, and 200-day moving averages? Because that gives us a pretty raw look at what the participation is within that particular index or sector or group. We then take those and compare them to the silver and golden cross indexes. And this is what gives us our market bias. Not only what is going on as far as the silver and golden cross indexes themselves, but also when you look at the price above the 20, 50, and 200-day EMAs. If participation is lower, if we have lower readings on price above their 20, 50, and 200, then we end up with a bearish bias in the intermediate or longer terms. And if participation is higher, we have more stocks above their 20, 50, and 200-day EMAs than we see on the Golden Cross Index or the Silver Cross Index, then you have a bullish bias. And this gives us a really good sense of where we should be or should not be within the market. So let's look at the chart, and that will explain really everything a lot more clearly. So what we have here is, of course, the S&P 500, and this is the price chart for that. Then we have our Silver Cross Index and our Golden Cross Index. Before I get into the Silver Cross Index, which again is my favorite indicator right now, let's look at the percent of stocks above their 20, 50, and 200-day EMAs. Because like I said, that is kind of an integral part of the getting a sense of the participation under the surface or under the hood, as we like to call it. So right now, this is a chart that I pulled out for today's recording. So it obviously will look different if you're watching this later, but it'll give you a really good sense of how good the Silver Cross Index is. And so first of all, we see that participation of stocks below the 20 or above their 20 and 50-day moving averages is very low. It's below our 50% bullish threshold. So that tells us that the bias in the short term is bearish. Now, when we compare these percentages to the Silver Cross Index, they're lower. These are lower than what the Silver Cross Index is. And remember, Silver Cross Index, how many stocks have a 20-day EMA above the 50-day EMA? Right now, it's below our 50% threshold. But what really I find is the most powerful thing about the Silver Cross Index are its crossovers or shifts beneath or above the signal line. We find that these shifts below the signal line have been pretty good. They tell us when to get out, tells me when to get out of the market. And the Silver Cross Index has been really good about telling me when to get out and when to get in. And you can see that this really does line up well with what we're seeing on price. So I would say that the Silver Cross Index is one of the key components to what you're doing with the market in general. You want to be on the right side of the market. And this index, the Silver Cross Index, will always give you that bias to tell you which way you should be in. But back to these percentages above and below the 20 and 50-day EMAs. At this point, with these percentages this low, lower than the Silver Cross Index, we know the Silver Cross Index is going to continue lower. The bias is still bearish in the short term because we have less than 50% and a decrease in stocks above their 20 and 50-day EMAs. And that is lower, which means the Silver Cross Index, which measures how many have a 20 above the 50, is going to go lower. Because in order to have your 20-day EMA above your 50-day moving average, you're going to need these numbers to be higher than the Silver Cross Index, and they are not currently. The Golden Cross Index is your long-term picture. We find it useful to give us a long-term outlook, but admittedly, this index moves a lot slower than the Silver Cross Index, which is why this indicator is my favorite, because it really does give us that look deeper within the participation of a particular index or sector. And this is why it is my favorite indicator. The Golden Cross Index, since I've got you here, the Golden Cross Index, remember, measures how many stocks have a 50-day moving average above the 200-day moving average. Right now, there's 64%, but lower are the price above their 50 and 200. We cannot get more Golden Crosses without price being above both the 20 or the 50-day moving average and the 200-day moving average. When price is above an EMA, that EMA is going to move upward. If price is below that EMA, it's going to move downward. That's the beauty of EMAs. So again, these percentages are lower. So we know that the Golden Cross Index could possibly move even lower than what we've seen. So the Silver Cross Index, my favorite indicator, and I hope you'll find it to be yours as well. We have on the decisionpoint.com website, if you are a member of any of our subscriptions, you have access to the Silver Cross Index on every index, the major indexes, I should say, S&P 400, 600, 500, NASDAQ, NYSE. We have Silver Cross for all of them. We have Silver Cross Index for every single sector, so you can see whether the bias is bullish or bearish for the sector that you are involved in. And then we do have about 5 industry groups that include biotechs, retail, transportation, semiconductors, and you can also get a Silver Cross Index for those on the website. So take a look at the Silver Cross Index. Consider what you're seeing as far as participation. It's going to put you on the right side of the market when you need to be on the right side of the market. I mean, look back here. The Silver Cross Index had a bullish shift above its signal line, and notice that's when the market started to move upward. So that's all I have for you today on the favorite indicator of the Silver Cross Index.